Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Dhanajay, Phadnis, manager of the Fidelity Asia Focus Fund. Good morning, Dhanajay.
Good morning, Emma.
So I thought we could talk about India today. I know you have a whole of Asia remit and you're able to invest across the region. And there has indeed been a lot in the press about China recently. But India remains quite an interesting investment case, not least because we have some upcoming elections, don't we?
Yes, India has always been, one of those stories which are very remarkable in that the potential for India is enormous as you look into the long term. If you look at one of the interesting facts recently is that India is now the sixth largest GDP, country by GDP, and it's expected in the next 2 years it'll actually overtake the UK to be number 5. So, there's a lot of progress happening, but even at that level, India's per capita GDP is only $2,000 US. So it shows you that the potential for long-term growth in India, whether it's consumption, infrastructure, healthcare, is just enormous.
And in the past, India has been rather stifled by bureaucracy, hasn't it? But now you've got a single party government, you've got interesting reforms coming through. What changes has the country made that have made it easier to invest in the region?
Yes. So India is still a very complex country, and it's many different states which come together. And you're right that this government has a majority in parliament, which has helped it with some reforms like the goods and services tax, the GST, which has been implemented some time ago. It had some teething problems, but now it seems like things are settling down. And there are also a lot of push by the government around some sectors like property. So they're trying to boost property through a lot of tax breaks for people to buy affordable property. So a lot of different things happening. Like I said, it's still a complex country, but it looks like a lot of things have come together in the last few years.
And how, as an investor, do you take advantage of this positive movement in terms of reform? Because the macro and economic and political is one thing, but actually making that into an investment case is quite another, isn't it?
So I do look at very much bottom-up stock picking, and while stocks are very different and companies are different, you can't ignore the fact that the strength of the economy or the direction of the economy is quite important for underlying earnings. And some of the secular trends, like I mentioned, consumer is a secular trend in India that will continue. I think the pace of change is driven by some of the things happening at the economy level, as well as a lot of the pushes that the government can make, which is healthcare and infrastructure and property. So a lot of things are coming together. And in fact, after a long period of disappointing earnings revisions, for the last several months, we are beginning to see a positive uptick in several macro indicators, whether it's automobile sales or it's property sales, and we're beginning to see some green shoots picking up.
And how are valuations in that country? Because there's a lot said about the developed world of valuations looking very high. And a few years ago, India, after the post-surge of Modi being elected, also looked quite expensive. Do you think this is an interesting entry point, or are things fairly valued?
No, India always looks expensive, you consider it in the conventional lens of looking at and comparing with different countries. For example, India right now on a 12-month forward basis trading almost close to 18 times, which is quite expensive in the global context. But what it means also is that investors believe and look forward to the long-term growth story in India, which is why they're willing to pay a premium consistently over the last many years. So while valuations are not very cheap, I think the real question is, can earnings live up to their expectations? And here I have a little bit of a concern because valuations are while where they are, earnings expectations are quite high as well. So we are expecting high teens or even 20% earnings growth for the next few years, which is quite a tough ask, and we'll have to see how the companies deliver on that.
And you say, though, yourself, you are a stock picker, you do look bottom up. So these sort of whole of market figures might not necessarily apply for someone like you where you're a stock picker. Where are you seeing the best opportunities?
So I've been very much focused on the large cap stocks, and I still see a lot of the opportunity in large cap stocks. In fact, if you look at mid and small cap stocks in India, they have become very frothy and expensive over the last 6 to 12 months. What we are seeing year to date is a clear change where mid cap stocks are down almost 15%, but large cap stocks are actually flat to up as a whole. What you're also seeing is that there are positive earnings revisions in the large cap stocks versus the mid cap stocks. This is the area where I invest in, which is mainly large cap stocks. And within the large cap stocks, you find many companies which have earnings which are export driven. So the IT services companies or the oil and gas companies, as well as the healthcare and pharmaceutical companies. So there's large sections of the market which are domestic linked, but there are also many industries which are export linked. That, coupled with some of the economic recovery we are seeing, is beginning to feed through in earnings. So I'm finding some really interesting stock picking ideas despite the more expensive valuation when you look at it from a top-down perspective.
Dhanajay, thank you very much.
Thanks, Emma.
This is Emma Wall for Morningstar. Thank you for watching.